Hello everyone, Nasir here. In this video I'm going to talk about the US 10-year bond yields. It's been quite a while I haven't made a video on bond yields actually. There's not much I can say often on this, simply because it's not as volatile, for instance, as other instruments. And with bonds and yields, unless you're a bond trader, you're not really looking to work on short moves and short-term moves, sorry. But I do use the bond yields as an indication of market direction, market sentiment, and what sort of movement or effect I might expect on things like commodities such as gold and so forth. Gold usually tends to have some sort of inverse correlation with bond yields. It's not always consistent, but it's pretty accurate. So I do look at bond yields to give me some indication in terms of where gold might be heading in the near future. So I wanted to make a video on bond yields now because I see a potential opportunity coming up. Over the past several weeks, we've seen bond yields just constantly increasing from around the 1.7 level up and up and up to we've reached about 3% now, which is all great and expected. And actually you'd expect that to happen with the Fed's focusing so much on potential interest rate rises. They've hiked the interest rate recently, and again today they're going to be meeting, and most probably they're going to hike the interest rates further. So that was broadly expected. And then on top of that, you've got all that stimulus and stuff, being sort of reined in, so that's going to affect the bond yields as well. But what I'm interested in now is this trend that's been going on for quite a while. I mean, it's only a matter of time until that trend is broken, although we might not know the precise reasons why this might be broken. Nothing ever goes up in a straight line, and it has to eventually sort of be broken, and the trend has to reverse in direction. So if, for example, I don't know, just for argument's sake, if we look at this trend here, where you might think bond yields were invincible, then suddenly there was a break of the trend, and then obviously a continuation. But the point is, the trend does get broken at some point. So I'm looking for this trend line to be broken, and I think we're getting quite near actually. At the moment, we've just retested that sort of level, and with today's interest rate decision, I think over the next coming days we could expect bond yields to spike up further. How much higher, I'm not too sure, but I don't imagine it's going to be much too higher, after which I'd look for bond yields to test this trend line again, and most probably fail this trend line. Once that point comes, I'm really keen to sort of extrapolate where the bond yields descent might end. I usually like to use things like the Fibonacci and so on. So suppose, for example, bond yields sort of rise up to about 3.2 and then start showing weakness in terms of coming down, and then I'd probably be able to more accurately sort of work out where bond yields might come down, maybe to around the 1.8 level or something like that. Again, way too early to speculate any sort of levels just yet. At the moment, I'm just waiting for the Fed to come out with the interest rate decision and see what impact that has on the market, and how much higher it's going to push the bond yields up. It's very probable it's going to push the bond yields up a little bit higher. So I'm looking for some signs of weakness and a reversal on the bond yields. And obviously, if we see a reversal on the bond yields, then I would be looking at the gold market, and that's where I would probably look for opportunities to buy gold. If you look at my analysis on gold that I've posted in recent times, you'd see I'm looking at gold to potentially go up to 2,100. If bond yields do start falling and it's quite prolonged, then who knows, gold might exceed the 2,100 level and beyond. But that's for a separate analysis. Do watch out for those analysis on trading gold. Thanks for watching my video, guys. I really appreciate you following my analysis. Please do not go and trade based on this analysis. I highly recommend you watch my previous videos, see how those analyses worked out, if they were fruitful or not, and make a judgment on my accuracy rate, and only then think about trading. I'd really appreciate it if you could click the subscribe button down below and possibly click the bell icon as well. And please do share this analysis. There's a lot of money in the markets. There's enough for everyone to have a piece of the cake. So share this analysis and help each other out.